welcome to Ahead of the Week for the 27th to the 31st of May. Today we're joined by Adrian Meals, Senior Broker here at Banc De Binary. Adrian, welcome.
Thank you for having me.
We'll be talking about next week's economic indicators. Now, I know you have a keen interest in what's happening in Germany. Tell me about the indicators coming out next week, starting with the German unemployment change, which is out next Wednesday and which analysts predict will increase by about 5,000.
Yeah, that's correct. First of all, let's look at Germany as an economy. We know what's going on in Europe. We know what turmoil they're having. We know that the euro's been going down for quite some time because of all these problems, banks defaulting and so on. Due to this, we have a strong interest in Germany because Germany seems to be holding all the countries together. They're bailing people out. They're helping the Eurozone move forward. Now, any economic data that comes through from Germany is very, very important. It's very important for the movement of the euro because of this, and that's why I have a high interest in it. We have unemployment claims. Now, unemployment claims, what do they mean to us? Unemployment claims basically tell us how many people have got a job at the end of the day. And a country's economy is based on how many people are working. It is the #1 factor in an economy that makes it move. If people are working, they spend more money and so on. So we're going to be trading the unemployment claims for sure. Now, it's important to understand that the forecast is quite high. They're expecting it to be 5,000 higher, like you said. Now that's quite a high number to say, so it's very possible that it could be higher than it was in the previous statistics. However, it may come lower than the actual forecast.
All right. Well, there are a couple of other German data releases on Wednesday, the CPI for one. Again, analysts forecast a small rise. Now, could you tell me what your strategy would be for trading this kind of data release?
Yeah, of course. CPI, it's basically telling us the inflation of a country, the businesses and the products and so on, inflation in prices and all that. It's a clear indicator if the country's moving forward or if the country's moving backwards. If the inflation is dropping, then we know that it's not a very good sign. If inflation is growing, we know it's a good sign. People are making more money, hence they can afford more expensive products. And that's how we know if a country's doing well. Considering it's Germany, like I said before, and it's holding the whole Eurozone together, again, it's an incredibly important piece of information. How we can trade it? There's a couple of ways we can do it. My personal favorite way is to wait for the data to come out, give the market a couple of seconds to move, see the direction that it's following. If it is following the correct direction compared to the data release, then we enter at the best strike price possible, and we make sure that our expiry is short term so it doesn't reverse and come back to where we started. It normally does move for quite some time. It doesn't move for the rest of the day, but it will move substantially for a short period of time.
Great, so consumer price indices are definitely favorite indicators. We've got Japan's CPI figures, which are coming out first thing on Friday morning. Obviously, the data release is a little early for us, but how do you see it affecting your other trades later on in the day?
Okay, exactly, very good point. It is very early, and I'm personally not going to be awake to be trading it. However, we can capitalize on the next day, because what tends to happen is what's important to understand is when we're trading fundamentals, which is what we're talking about right now, it's what a common trader thinks. So if we see that there's a bad result for the CPI in Japan, we know that traders are immediately going to want to sell the Japanese yen because they believe it's going to drop in value, and it's like a panic trade. And people enter so they can get in as fast as possible, which makes a spike in the market, either going downwards or going upwards depending on the data feed. Now, that's not the true value of the currency. That's just what happens at that moment. Okay. So when that happens, we know that the market's going to, let's just pretend it's going to be positive. If it's positive, we expect the Japanese yen to rise. So the Japanese yen's going to rise, but not substantially. It's going to rise for a small period of time, and then it's going to take the next day for it to correct itself and go back to its correct value. So if you want to picture it, you'd see the yen moving in an uptrend, let's say. A spike would come when the data comes out, and then by the end of the day, you should expect it to come right back to where it came from. So we can capitalize on trades, either place one trade for the end of the day to go down or up depending on the data, or we can place lots of small trades throughout the day while it's correcting itself.
Yep, very good tips there. Any other thoughts you'd like to add?
Well, basically to sum everything up, like I said, we want to pay attention to what's going on in Germany. Fundamental trading is a very good way of trading. It's a very easy way to make money because we have immediate movement, immediate opportunities to make some money, and it also gives us longer term trades when the market's correcting itself. So always keep an eye open for fundamental analysis.
Great advice. Thanks a lot, Adrian. Thanks
You're
for
very
joining
welcome.
us. That was Ahead of the Week for the 27th to the 31st of May. If you'd like to see a topic discussed on next week's episode, drop us a line on our Facebook page. I'm Natalie Kiru. Thanks for watching.